Good morning, everyone. We meet once again with a new week. Today is 11/11/2024, and there's a lot of updates on the market, although we're not expecting a lot of new data in this market. So as we can see that today, most of the markets are closed, especially on Monday. So the volatility is going to be a little bit low. Same with the liquidity as well. I don't think there's a lot of movement that we are expecting at the beginning of this week. So it should pick up from Tuesday onward. We have some news from Wednesday, Thursday, and Friday regarding core PPI, core CPI. And then we have Powell. He's going to speak on Friday noon, Dubai time. And in the afternoon, we're going to have some more data as well from the US. The rest of the countries, almost not enough data that's going to interfere. So now let's move to the market. Nour, we can see that finally the dollar index showed us the positivity again, and we're back up. So basically now we're trading again above 105. Although before we've seen that the market started correcting, or there was a fear for a proper correction, but it did hold above 103 properly. Now we're trading at 105.27, although the Fed did cut the rate. So what's the main reason why the dollar is still getting stronger? So we can move and talk about the rest of the market.
Yes, one of the main reasons is basically what happened last week, not because of just the elections, but also the Federal Reserve decision. Before the Federal Reserve decision, expectations or estimates or the Fed funds futures were pricing in the possibility of further rate cuts in December and even in January. But however, after the Federal Reserve meeting, and in addition to that, after some of the data that includes also the consumer confidence data and University of Michigan inflation expectations, basically it did put some drag on the expectations of further rate cuts. Now, Fed funds futures were pricing in over 90% chance of a rate cut in December. Now we're pricing in less than 70%, which is basically why you're seeing the dollar back up across last week, or specifically at the end of last week. Now the question would be: is this like imminent? Is the Federal Reserve going to stop cutting rates? I think this is too early to call. We still have a lot of data, which basically we're waiting this week. That includes the key inflation data, and I would say one of the catalysts that might actually refuel the ideas of further rate cuts by the Federal Reserve is basically if we get another surprising inflation print to the downside, not to the upside. And if that actually happened, this would basically put the drag once again on the dollar index, at least on the short term.
Let's remember something as well. We've all read the reports that that Powell is ready to stand up for Trump, and he's gonna try to stick to whatever the Fed should do by themselves without any influence and all these. Does that affect the market as well? Are we gonna see that inside war as well?
I mean, even if Trump asked Jerome Powell to step down, legally he can't do anything. But it's not up to the president to fire the Federal Reserve, the Federal Reserve chief. So this is basically, I mean, it's going to be a great headlines for the media to talk about. But at the end of the day, it's not going to affect the Federal Reserve that much. I think again, it's too early to say that the Federal Reserve will start actually changing course, because also the Federal Reserve in the recent meeting, or the last meeting previous last week, it was clear that they're actually they will be cautious. They're not going to be stepping into any kind of decisions just because of the elections outcomes. They will have to look at the data, and then they will take decisions. So I think again, it's much better to wait for the data this week. That will give us more clues. But at the end of the day, if you look at the dollar index, we're kind of overbought over the past week after that move. So we should expect a little bit of some sort of a retracement to the downside.
Yeah, there's a bit of overreaction all over the market anyway.
As always, that's something to be expected.
Yeah, so if we look at S&P, Dow Jones, and NASDAQ, finally we have a new high, but at the same time, it's a bit over-exaggerated. I feel like now we are at the top of the trend up because we were trading in a channel and we hit those levels of the upper channel at the moment. So we are near a resistance, which scares a lot of buyers from these levels. So now we're gonna wait and see if it's gonna break or not, or what would be the reason it would break. So now we're talking about let's say Dow Jones trading 43,820, Nasdaq above 21,000. S&P near 6,000. We are trading 5,964. I think we're gonna hit that anyway. It's a psychological level, but still, we are literally at the top. What would push the S&P, Dow Jones, and Nasdaq to make a new high and break that trend up, and we start a new era? So we start a new channel.
You would need a very, very strong catalyst that might come in either from the inflation data that we're waiting this week. As an example, if if the core CPI basically ticked lower more than 0.2% or 0.3%, that would be a good catalyst for the market, because this will refuel again the expectations of further rate cuts by the Federal Reserve in December and even in January. Plus, for the time being, at least if you look at the earnings season, was
unexpected, right?
So far, the earnings season is much better than expected.
No, I'm talking about the inflation data.
Inflation so far, it's still within expectations. But on the other hand, the earnings season is still better than expected, but very cautiously optimistic about the upcoming guidance from most of the corporate earnings call. So I would say if you look back in history, every single time we've seen such rally, regardless of the reasons of such rally, it ended up with a strong correction. When this correction might happen, nobody knows. But at the end of the day, I would say traders should keep an eye and do not also chase the market when it's at record high. It's hard for me to just basically initiate any kind of long positions at this level. Just at least wait for any kind of retracement first.
From a risk management perspective, this is suicide, actually. So let's stick to that and be very careful. There's a lot of other opportunities. So let's talk about those opportunities. We know that for a fact, every time gold does a small correction, it's getting backed up and buyers are pushing it back up. We've seen the $80 correction last week, and we've seen how from the moving average, we couldn't close below the 50 moving average on the daily chart on gold. Now we are trading at 2,697. We couldn't close below 2,660. The possibilities are still open. I'm not saying it's not open, but still, even with all that, the geopolitical tension did not end, although Trump did say that once he is elected president, he's gonna end all wars and try to fix the whole thing. So we're still in that dilemma to understand if once he gets into the White House or once he is elected, when the action is going to happen, because there is at least 60 days or 50-something days in front of us to be able to see some results. So what do you think about that? Technically speaking, the channel is obvious. The trend is up. We didn't break anything yet.
Sure. I mean, gold, don't forget, I mean, gold basically declined over $100 after the elections results, which basically brings us back to the same things that we've been talking about recently about, markets basically pricing events in advance. Or the future events in advance, and then when the actual event happened, just like the U.S. Elections, we saw the gold decline more than $100. Now, did this change the outlook? No, certainly not. We're still looking for most probably we're going to get another record high at some point in the next few months. At the same time, a correction is underway, especially after breaking the 2,700. We think it's a possibility to see maybe another probably $50 to $60 to the downside. But in order for us to say that the trend has changed, we need to wait at least to see a weekly close not just a weekly, a monthly close below 2,600 until we start seeing that, okay, well, the outlook or the short-term outlook has basically changed from a strongly bullish to maybe to a short-term correction. Other than that, I think this is basically just another short-term correction, especially that if Trump decided to basically, regardless of the war, leave the war on the side for a little bit. We hope the war is basically will be over, but at the same time, leave the war on the side. If Trump basically decided or is able to do whatever he basically promised the voters to do when it comes to all the economic policies and tariffs, this is basically will increase the deficit big time, and this would risk inflation to go back
different
up.
Situation at the moment.
Exactly, and this is why basically gold was rallying. So we saw the correction. If this happened again, this is basically another opportunity to start even looking for another rally.
I think we'll wait for another week and see more details regarding that. But the major support, we all agree it's 2,600, and major resistance still the previous high 2,790, and the previous close of last week on the bottom would be another support as well. This is regarding gold. Now let's quickly talk about oil, because I need to move to the FX. There's a lot of things that we might benefit from. Oil bounced back up. We're trading the US oil is trading now at 71.36 around these levels, and we've seen that we did a proper correction from the support line, and it's kind of like well supported. We are trading in a channel at the moment between the 67 and 72, 73. We're still trading the same levels. What's going to happen to oil? We know that Trump has a different style and strategy regarding oil itself, or regarding the industry itself. So where do we expect oil to be?
Oil, over the past week at least, you've seen a multiple announcement by OPEC and OPEC Plus, and this is becoming kind of something that we're used to. Every time oil loses about 1 and 2%, there would be some sort of verbal intervention, which give us sort of a clue that OPEC Plus is willing to kind of help in keeping oil stable above a certain level, or there will be a kind of a floor. When in Brent, that floor may be between $72 and $70. And this is what Brent crude has been basically defending over the past few weeks, and then trying to break above the 74. So that's from one side. With oil or with war or without war, I think OPEC Plus will be very active going forward. Especially also don't forget the stimulus in China that should start even showing at least some sort of support for oil. And this depends on what they're going to do further. So I think any downside retracement, it's going to be hard to short. If that's the right way, to put it, until we see actually how the rest of the global economy, because the recent data is still showing that growth is sluggish, but at the same time we're not talking about any kind of recessions anytime soon.
Okay. So, let's move a little bit on the FX side. So we know that the dollar is getting stronger, and it's too obvious. We kind of like moved from the correction idea, and then we have a new trend over there, which is fine. Let's talk dollar yen. We've seen dollar yen bouncing back up from the levels of 140 and 141, and even 139.70. So we bounced back up from those low levels, and we've seen it correcting. We hit the 61.8 FIBO, and we tried to break that level as well. We are trading above the resistance line at the moment on dollar yen. Where do we see dollar yen? Although we've seen on the weekly chart 2 dodgy candles so far.
Yeah.
So is it the end of the trend up, or like at the end of the correction, I mean? Or are we starting a new era, and then we wait until we break the 54, 55 to see it in the much higher levels?
I'm going to be very brief on dollar yen. Dollar yen recently, we're basically, kind of now in the middle, trying to break above the 55 or trying to break above the 155 or to break below 150. But the Bank of Japan made it very clear that they're still looking to, increase the rate for rate hikes going forward. However, the timing is still not clear. At the same time, you have the losing the majority by the government after the election or after the snap election. This is going to put also a drag on the government, how they will be able to implement their policies. So I think it is most likely, I would say, the yen will weaken even more. Which means there's a possibility that we break above the 155 once again. However, this doesn't mean that the Bank of Japan will stand still. Most likely, they will start with verbal interventions before they go back into an actual intervention. Maybe at some point, maybe in the next few weeks. But this is also will be depending on what the dollar yen will do. But I wouldn't be chasing the upside or the downside at any chance or at any point.
You won't be chasing.
I won't be chasing. I don't like to chase.
Okay. For me, it's an opportunity, so we can enjoy it until the Bank of Japan decides to interfere at least. Okay. So we've seen the same as well for the euro dollar. I'm going to end it with euro dollar. We've seen the same move as well on euro dollar. The trend is still the same. It's still trending in a sideways channel, but a little bit upward. The correction or the attempt to break the 107 wasn't, I think it was a failure. Can we see, despite the strength of the dollar, is it a possibility to see euro dollar trading again on the 112 and the next, let's say, 2-3 weeks at least?
I mean, with the current shift, maybe not, because also there's a lot of talks now that the euro might be going to parity, especially if the ECB continues with its rate cuts. On the other hand, if the Federal Reserve decided to pause, that might actually put more drag on the euro more than to the upside. But however, I would still believe after the decline that we saw in the euro over the past few weeks. We might see some sort of retracement at least towards 109. We saw the 109, but I was hoping for 110. Maybe we will get there before we start seeing a little bit more on the downside. But so far, if the ECB basically continued with its rate cut, that will basically put more drag on the euro more than what it will put drag on the dollar index.
Beautiful. All right. So be very careful, guys, because of the thin liquidity for today. We're going to see you next week. If you have any questions, please do not hesitate to contact us. We'd be more than happy to answer you. Have a good week.
See you.